I'm gonna get this analysis going really quickly, and I'm gonna try to keep it short. I was expecting a dump today, and we did see that. Today was a red day, but the price is having a hard time moving outside of this cloud. I'm gonna zoom in a little bit on the daily candle, and you can see that this does appear to have that bullish hammer reversal appearance to it, but it is not exactly that, like it hasn't been in other similar candles like here and here. These green candles have a similar shape to this guy. Overall, I think that there's a lot of support down here at 17, caught me off guard. And specifically with respect to the puts I'm holding, I'm still holding a $17 put from last week. And if we don't get a big dump below 17 tomorrow, I have to actualize a loss on that contract, which is gonna suck. If I had taken my losses earlier, of course, I could have positioned better and made a recovery and made money on today's dump, but I didn't do that. I wanna keep my chart looking nice, and I'm making sure that I have at least some green sprinkled throughout. So today I pretty much traded a call during a corrective phase, a bounce up after the big drop, and I got $2 out of that, which is funny, but anyway, I'm just like, honestly, I'm just swamped at work. I'm having such a hard time. I think though that my break is coming. We have this kind of weird double top. I mean, the RSI is still dropping, right? Definitely a red day today. I think that implied volatility is starting to signal a big thing. This is a rise in the implied volatility on the daily chart on a red candle. Finally! I've been waiting for that for such a long time. So if the implied volatility is going to increase on red candles, that's going to bode very well for my $17 put if we can get the price to push down past that $17 strike, which it may do very shortly. I'm going to zoom in a little bit. We'll talk about what I saw today on the 1 minute. And I'll pull up those drawings as well. Let me turn off the Ichimoku cloud. I like the cloud, it's great, but it's hard to look at all day. Okay, wow, is this an inverted head and shoulders? No, it's not, because the shoulders are occurring at different levels. Like that, the support here towards the end of the day is higher than this support. This would be a complex inverted head and shoulders with 2 left shoulders and a head, and this would only be a single right. So this is not an inverted head and shoulders. It does look basey though, doesn't it? It almost looks as much of a base as this monstrosity, which appeared to be some sort of inverted head and shoulders. And it also has a similar, and even this day looked like a reversal too. None of these really follow a reversal pattern. None of these days do. They're all bearish. Every single one of them, in my opinion, is bearish. The flavor of the downtrend is big morning dump, late afternoon pump. That's the flavor of the downtrend, and that's what we saw today. And I'm not surprised to see that the volume is even lower. I have a red dashed line here, and I started this trend line by connecting these 3 peaks and then shooting it backwards. So this intermediate high here, it came up to 1870-ish, but as you can see, these are pipe tops. And as I've said before, if you look at this on a large enough time frame, those are going to be pipes. Probably 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Yeah, so if you can get a 5-minute chart, there's probably pipes in here. You know what? Let's just look at that. Let's look at that. Let's turn on a 5-minute. Do I get pipes there? Big question of the day. That's hard to look at, isn't it? That's a headache and a half. Not quite pipes, right? Almost, though. Almost. Maybe on a 15-minute. I don't know why I'm chasing this. It's not really worth that much effort, but when I draw these trends, I like to keep it clean. So let's just have a look. Yeah, those are pipes. That's a pipe top. Bounce pipes. And on the pipe tops, it doesn't matter if they're tails or wicks. They're called pipes because of how they appear on a, let's see here. It's not the candle chart. They're called bar charts. So on a bar chart, you see that these two have the same height, basically, same low. Little difference in the height. That's okay. That's what a reversal looks like. You can see that if you know how to read this kind of chart. You know, I like bar charts. I do. It's just they're a little less intuitive, right? Like this is a lot harder to look at than a candle chart. So I'm going to change that back to a candle because I said I was going to try to keep this quick. Right, so what do I see? I think I see a big bear flag. Not a big bear flag. But essentially we have two levels of support and resistance. One there towards 1870-ish, right? 1866, whatever you want to call it. And then one down here towards $17. And there are plenty of touch points here. We'll call that one for fun. 1, 2, there's one down there, one up here. You can see how the price is bouncing around. All right, so that's what we're talking about. 1, 2, 3, 4. There's 4 different touch points, 2 on each side, and it's all coming from a downtrend, a big downtrend. And I thought that this looked the cleanest on the 1 hour chart, so I'm just going to go ahead and pull up the 1 hour. Sometimes it's nice to get that perspective. Yeah, if you zoom it out way like this, this would be the flag, and that flagpole is really tall. It probably starts up here at $24. This is probably the flagpole. Whoops. Okay, I'm gonna have to do a little dancing here. So from 24 to 17, what's that gonna be, like $7? Wow. So if this turns into a half-staff flag situation where actually the flag is tilted downwards and it represents the midpoint of the run, then we have another $7 slide coming from about $17, which would bring us down to 10. This is looking really bearish. It's looking really bearish. I'm just gonna make a hypothetical trend here, right? That looks good. And maybe right there? It could be that this occurred over an opening and a close. Is that true? Sometimes opens and closes can throw the price around. Yeah, that tail occurs off of an opening candle. So it's gonna be a little volatile, a little loose, as Bulkowski would put it. But yeah, you see it from there, don't you? That is a bear flag. So although there is really strong support here at 17, that support is waning, and I don't expect the price to break out and up. I expect another downward move. I'm going to duplicate that line, and we'll just say off the top of that, moving down, that would put us down here towards 1170. Of course, I'm looking for that 1290 level to be reached again because of the V top. So today's analysis is bearish. I have to take losses on a put tomorrow if it can't run into the money, or if the price doesn't dump as I anticipated to. So I don't know. I'm sitting on my hands and I'm waiting. I think though that we're gonna see a partial rise here. This is a partial rise. If tomorrow's open is a dump and we can break that lower trend, it will plummet, I believe. I believe the price will just fall. Because let's just have a look. Where's the next big support from here? Find a peak or a valley, right? You gotta go way down here to like $14, $15 before you get a series of valleys here. So there is gonna be support once we get down here, and it's probably gonna start at that low and go up to that highest peak. There's our next big support zone, okay? And I expect to get there this week. And if we can get there this week, then this contract I'm holding will be very profitable, and that'll make my daily trading chart look really good. But if not, I'm gonna have to just take a loss and sit through a bounce, because I know what everybody's gonna be saying. They're gonna be crying double bottom, and it's not confirmed yet. Okay, if you have 2 touch points on a horizontal level of support and resistance, it's a double top or a double bottom, and if you can get past that intermediate higher low. But until then, it's nothing, because you never know. You might get 3 touch points on both sides, and then it's a rectangle. So why would you call it anything other than what it is, which is a touch of support and resistance? It's not a pattern yet. You gotta get over the patterns, I think. Okay, so this was what is this? Actually, Blank has what looks like my measured move down trend lines on it. And you can see, now in my measured move down fractal theory, there's an internal trend line support, and there's a V-type bottom that extends below that. And then there's an uptrend from that bottom. And once you break both of these levels, the price dumps to a new major low. That's my measured move down fractal theory. And looking at this is kind of cool, because you can see that the price has lost that level and today failed to reach up back into it. So this kind of looks like a test of the breakout price, and yeah, tomorrow's open is gonna be really important to see whether or not that occurs. But I wanted to open this chart up just to talk about what a double bottom would look like. I mean, this would be a really weird double bottom. Have you ever seen a double bottom with an intermediate high that shallow? I haven't. I really haven't. I'm not going to measure. I mean, and where would you start the top of that pattern? Way up here? I mean, it's disproportional. It's just not. It's just not that. I just don't think it's double bottom. Anyway, that's what I have. How long is this? 10 minutes. Longer than I wanted. That's okay. I hope you enjoyed the new intro music, and I'm out of here.